Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 17th, 2025, and we're diving into Aramark's latest earnings report for the fourth quarter and full fiscal year 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Aramark has had an interesting year, and I'm excited to break down their performance and future outlook with you.
Revenue and profitability overview. Let's start with the top line. Aramark reported a consolidated revenue of $18.5 billion for fiscal year 2025, marking a 6% increase from the previous year. John, what are the key drivers behind this growth?
Aramark's revenue growth was primarily driven by net new business and base business volume, with a notable contribution from an additional 53rd week of operations. Organic revenue grew by 7%, which is impressive. The company also saw a 12% increase in operating income, reaching $792 million, thanks to enhanced supply chain capabilities and disciplined cost management.
And how did this impact their earnings per share?
Adjusted EPS for the year was $1.82, a 19% increase from last year. This growth reflects Aramark's strong operational performance and strategic initiatives.
Quarterly performance and strategic wins. Moving to the fourth quarter, Aramark reported a revenue of $5 billion, a 14% increase year over year. What were the highlights of this quarter, John?
The fourth quarter was particularly strong for Aramark, with organic revenue growth also at 14%. This was driven by substantial new business and high retention levels. They secured the largest contract win in their history within the FSS United States segment, which is a significant achievement.
How did this translate into their earnings per share for the quarter?
Adjusted EPS for Q4 was 57 cents, up 6% from the previous year. This was despite some headwinds from incentive-based compensation and restructuring initiatives.
Operational efficiencies and future outlook. John, let's talk about Aramark's operational efficiencies and their outlook for the next fiscal year. What stands out to you?
Aramark achieved a leverage ratio of 3.25x, the lowest in nearly 20 years, and their free cash flow grew by 41%. They also increased their quarterly dividend by 14%, which is a positive signal to investors. Looking ahead, Aramark is guiding for an adjusted EPS of $2.08 to $2.28 for fiscal 2026, indicating strong confidence in their growth trajectory.
That's quite promising. What are the key factors contributing to this optimistic outlook?
Their focus on expanding supply chain capabilities, disciplined cost management, and a robust pipeline of new business opportunities are key drivers. Aramark is well positioned to capitalize on these strengths in the coming year.
Key takeaways. In summary, Aramark has delivered a strong performance in fiscal 2025 with significant revenue growth, improved profitability, and a positive outlook for 2026. John, any final thoughts?
Aramark's strategic initiatives and operational efficiencies have set a solid foundation for future growth. Their ability to secure large contracts and maintain high retention rates will be crucial in sustaining this momentum.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Aramark's performance in the comments below.